Welcome back. Continuing with corporate conversations then, just as the market continues to recover from the lows of the day, Punjab National Bank is the next management on the show. The growth was strong. NIIs were up just 1% from last year, but the loan growth was below the management's guidance. Ashok Chandra, who is the MD and CEO at PNB, is joining in to discuss the quarter gone by. Mr. Chandra, good morning. Thank you for joining in. You had guided for your loan growth to be at certain levels. It's come in below the guided range, but do you believe that there is a recovery on the annual in the subsequent quarters and you would be able to meet your loan growth guidance for the full year?
Yeah, loan growth guidance we had given for 11 to 12% for the entire year for the FY 25-26. And this year, the segment-wise, if you see the growth which has happened, like MSME sector has grown at 18%. Core retail has grown at 17.7%. So there are segments where the good growth has happened, and that was the focus area for the bank also, a lot of activities which we had started. And we are also aiming that this RAM growth should grow at 16-17%, and that we are able to achieve that. So area where we have missed out is the corporate loan book, and we were conscious of the fact that whatever growth we are doing it in the corporate loan book, I think that corporate book should contribute good in the yield part now. So there are certain low yielding advances under the corporate book was there, which we have set out. And because of that, there is a muted growth in the corporate loan book. But I can give you the figure. We have 1,29,000 crore of sanctioned book, for which the documentations are also done now. And we are expecting that disbursements are going to happen in that corporate loan book also. Some disbursements have already happened, and some is going to happen in the Q2 and Q3. You know that many of the project loans which PNB is sourcing that, the lag time is there for the disbursement. Generally, the project loan, it takes one...
Yeah, got it, sir. So actually, we got your point about loan growth. The market would be a little more worried about net interest margins because one big rate cut came in June. That has yet to be absorbed. So should we expect that in Q2 also another 11 basis can go off in the NIMS?
See, we have the global NIM is 2.7%. And if you see our domestic NIM, that is 2.84%. So I'm expecting that in the Q2, I think we will be in somewhere between 2.7 to 2.8% in the domestic. And in fact, we are mindful that overseas, whatever the advances we have done, I think there we are facing some the stress in the margin front. So there we are going to look forward and see that how much adjustments we can do that. But definitely, I think between 2.7 to 2.8, we will be holding on in the Q2 also.
In the domestic, but
in
overall,
the domestic and overall also, because we have made some adjustment in the cost of deposit also. The deposits are also repriced now, and that impact also will start seeing in this quarter also. If you see my cost of deposit, some 3 basis point, it has come down, and that was only 1 month impact. So I think in this quarter, the full impact will be there for the 3 months now. So I'm hopeful that 2.7 to 2.8, definitely I should be in a position to hold on this.
Okay, so 2.7 is the lowest in terms of global NIMS. Okay, that's good to hear, sir. You know, your credit cost is, I mean, you should get a trophy for it. It is the lowest in the industry, I would think. 14 basis points of credit cost. It can't go lower, no? Should we accept that?
Yes.
That it can inch up a bit this quarter?
No, I think the guidance also which we have given 0.5%, and definitely we are well below that, and we will continue to hold on. The advantage is that since our PCR is 96%, and even the tangible PCR, excluding that technical write-off, that is also around a 90% plus now. So today, whatever recovery we are doing it is adding to my write-back of provision or going directly to the operating profit if it is recovered in the technical write-off. So that is one advantage is there for us. And despite having challenges in the Q1, we have made the recovery of 3,300 crore. So if you calculate 90% the write back of provision, I think a good write back is happening in the system now. So that
what is the recoveries guidance for the year?
We have given the guidance of 16,000 crore in the entire year. And this quarter itself, 3,300 crore we have recovered. There was one big account was to be recovered in the Q1. which has happened in the July month now. That is a big recovery that has happened. So definitely that benefit will come in the Q2 now.
Okay. Do you want to explain? I mean, I think all of us have understood that you have taken a 3,300 crore rupee hit as a one-time tax hit. But
Yes.
can you want to briefly explain that to the viewers?
Yeah, absolutely, madam. I think this is a very right point and right opportunity for me to explain the things. Old tax to new tax regime, we thought that this is the right time because whatever the benefit which we were supposed to get out of the MAT, as on 31st March 25, we have exhausted everything. And this is the right time for us to move from old tax to new tax regime. So when we decided, and board also decided and gave the permission to go for that, then we thought that let us do it in the first quarter itself, because whenever we do that, that has to happen in the first quarter itself. So the DTA recalculation has happened because earlier the DTA calculation was at 34.94%. And when we are doing that new tax regime, this is at 25.16%. So that difference of that calculation has made a hit of 3,324 crore as a one-time provision for the income tax. And if you add that 3,324 plus this year at 25.16% tax, it comes to 1,750. Both, if you add, it comes to 5,083 crore as the tax outgo in this particular quarter. So if you see my PBT, it is very good. It is 6,758 crore. So I am expecting that after migrating to the new tax regime, there will be a benefit of 10% in the operating, the net profit out of this operating profit. And going forward, I think 7,000 crore plus will be our operating profit. So Q2 onwards, straight away, we are going to have a benefit of around 700 crore in the net profit just because migrating to the new tax regime. So I think that is the comfort I want to give to all the stakeholders.
Sir. Yeah, got that, sir.
And with that, one more point, 16 basis point ROA is going to improve with migration to the new tax regime.
That's big. That's big. Actually, the adjusted ROA is 1%, although
yes.
Unadjusted, it would look like 0.3. That's only because of the tax one-time hit. A final question, sir, on this SMA2. A bit worrying, I mean, compared to Q4, SMA2 numbers have risen. I mean, for those of you who don't care for this abbreviation, it means those loans which are over 60 days past their due date. You know, that's always a worry because they can slip into NPA. Should we worry that the 14 basis credit cost will now have to increase to probably 20 or 25 because of this SMA loan being high?
Madam, if you see our slippages ratio for this quarter and if I extrapolate for the entire year, it comes to 0.71%. And I can give the comfort that 100 crore and above, none of the loan book is under stress now. Even SMA 0 also, none of the corporate book is there under that SMA 0. So absolutely nothing to worry about it. In that, this year also, this quarter, 1,800 crore which has slipped, mainly it has happened in the MSME segment, that is around 964 crore. And retail, it is 400 crore and agri, it is 300 crore. So all put together, nothing has slipped in the corporate loan book. And we are going to hold on to this figure quarter to quarter. Our slippages in every quarter, we are expecting it should not cross more than 1,800 to 1,900 crore.
Okay.
So absolutely, there is no challenge as far as the fresh slippages is concerned.
Okay, got that. Actually, sir, we have lots more questions, but your results have come on a day when it is very busy both for the macro economy and for the results. But thank you very much indeed for clarifying some of the doubts that investors may have. Okay. Over to you, sir.